Hey traders, welcome back to another workshop. So beginning of the year, especially when we just started 2024, I always try to make sure I push out more workshops so all of you can gain absolute more lessons, more knowledge and experience before we kickstart the new year. So 3 of you asked me similar question. One was Dylan, John, and also GC. So they asked me this question: hey Neo, how will you really define entry confirmation? This is a topic that I think I have discussed before. And the second question was, hey Neo, how do you decide when do you re-enter a setup, re-enter a position? So let us just use gold as an example. So for example, today you say, if we put on the replay mode, we don't care about the pattern, we don't care about the strategy. Let's assume today you decide to short gold right here. The word confirmation are really broad. There's a lot of things can be included, can be consisted into confirmation, and everyone has different definition of confirmation. For example, some of you can say my confirmation is the moving averages. Some of you can say my confirmation is the market structure. Some of you can even say my confirmation is the candlesticks, etc. So the way I define entry confirmation, there are a few things. So I want all of you to really note it down. First one, we have what we call the market structure. Now obviously market structure is the main confirmation before I pull on any setup. If the market structure is not there, or if the market structure just seems a little bit confusing, a little bit choppy, I will skip the setup. So first thing, market structure. Please make sure you note it down, market structure. Second confirmation can be used as the higher time frame. Remember, it's only the high time frames, EMAs. So what time frame? It could be the 1-H, 4H, and daily. These are the 3 main time frame that I use them to guide my EMAs. So there's no point for you to look at the 15-minute and say, hey, 15-minute EMA is crossing bullish, I want to go long. Because on the lower time frame in nature, you will see EMAs constantly crossing back and forth. The only time where you will see the 15-minute EMAs or the 5-minute EMAs just pushing into one unidirection to one direction, that's only going to happen when market is in an extremely strong trend. What I'm saying is really strong trend where price just keeps driving non-stop, just like this one. When price is in an extremely strong trend or an extremely parabolic trend, that's the only time where you will see a trend goes into one direction, and it doesn't happen very often. Maybe just like 5 times in a few months. It could be as little as that figure. So I always like to capture a trend that is healthy instead of a crazy parabolic trend, because parabolic trend in nature, it is not as sustainable as a trend that is doing healthy push, healthy pullback, healthy push, healthy retracement. So make sure you understand that. And third thing could be this is what we call signal V trigger. I've talked about what is an entry signal, what is an entry trigger in our workshop before. So if you haven't watched the workshop, please make sure you go and watch it if you are a little bit confused. Both signal or trigger can be considered as an entry confirmation. The word confirmation is broad. Alright, it's like signal. But trigger is a little bit more specific. Alright, so both entry, signal, and trigger can be considered a confirmation. It could be TPF pattern. It could be, price is forming a flag. Or price is showing shallow pullback while it's trying to retest a resistance level. Price is forming a steep pullback when it's retesting a support level. All these can be considered as confirmation. And the last confirmation that I like to see is not really the last one, the fourth one is what we call the momentum. I like to use momentum and put it into consideration as one of my confirmation. Because let me ask all of you, when price is doing this, let's say you wanna trade a bull flag. When you trade a bull flag, there's really not much confirmation. The first one is the EMA, second one is the tight consolidation. That's it. How do you justify the quality of the flag is also depending of the speed of the impulse. All right, and also you can use structure to sort of guide your entry as well. Why? Let's say when this, let's say I'll draw two flags, and let me ask all of you, just think about it and decide which one is higher probability. The first flag is this: price have an ultimate resistance, then it dropped, they come up, and it do this. Let's assume this impulse here is about 40 pips, and the distance between the flag to the resistance is about 50 pips. On another flag, we have a key resistance being broken, drive, then here we form a flag. Maybe this impulse here, from here, the low to the high, from the breakout retest area to the high of the flag is about 90 pips. So let me ask all of you, A or B flag pattern, which of them are more higher quality? Obviously is the B. Why is it B? It's because first thing, our first confirmation is price breaking through an all-time high or breaking through a major level of resistance. First confirmation. Second confirmation is the speed of the breakout was extremely strong. So the momentum itself, the volume, the volatility gives you great opportunity to go long, because when you're trading a bull flag, you're expecting what? Momentum. If there's no momentum, there's no point for you to trade a flag. And the third confirmation is price not just break above the ultimate resistance, it has also done a retest. So what does it mean? Price is even telling you that it's holding above highs, it's holding above key level. So you got the speed, you got key level being broken out, you got price retesting a key level, and the last thing is what? Maybe the moving averages. So all these are confirmation. Alright, so all of you to understand, confirmation is really broad. This term is very broad, so make sure you understand the basic before you try to understand confirmation. Because if you don't even know how your system works, what is your edge, you cannot find a proper confirmation. Make sense? Alright, so the next one I would like to discuss is simple. It could be as simple as weak rejections, right? So I like to use not really the, why not we change the word a little bit and say price response, right? Just use price response as general. So if let's say today you have price approaching a key level resistance, maybe it's an all-time high, price goes up, then it slows down. Versus when price push back to the high and it's doing this. Which one do you think is better to go short? Obviously, again, is A. Why A? Because the way that price respond to the key level is telling you that we are getting weakened. Sellers are in fact showing some signs of existence on the key level. While for this one, when price react to the key level, it seems like there's no sellers at all. Then which one would you be happy to risk on $5,000, $10,000? Obviously scenario A. So that's what we call price response. The same thing, let's say we have a support here and price comes here, keeps showing lots of weak rejection, lots of massive rejection. What does that tell you? We're showing response, we're showing reaction at the key support level, as opposed to this one. When price comes down, we just show a solid body close under the key level. Then that itself, the price response is telling you that sellers are pretty strong, and therefore you shouldn't try to trade against it. So I'm bringing these specific workshop to all of you because I want all of you to understand. Don't get confused by all these workshops. I want all of you to really understand trading, price action trading, profitable trading is all about understanding the basic. So if let's say today you say, oh, Anil, I'm a little bit confused by the word confirmation. I don't know what I'm doing. I feel like I don't have an edge. Go back to the basic. Go back to our workshops. We have a complete list. Go back and study the first level, the basic workshops. Because once you understand how supply and demand works, how price really works, and what is the logic that triggers price movement, why does price behave certain way reacting to key level, how does your system work? The most important thing is, do you know what you're looking for? If you don't know what you're looking for me to explain 10,000 workshops to you, you will still be confused because you have not done the basic yet. You have not done the basic learning yet. So all of you, please remember today, if you want to understand how price action works, first understand how price works. Why does price behave in a certain way? All right, because price action trading on one side can be extremely discretionary. Even for myself, a lot of times, even my wife, because sometimes she trades beside me. She's a 5-figure trader as well. Sometimes she sits beside me and she trades, and she will ask me certain questions. Hey, why do you think you want to go short on this pair? And I only tell him is my confirmation, and sometimes she still doesn't understand them. But why do I know it's going to drop? Why do I know I want to sell it? It's because I have enough experience facing the chart. Because for example, if you don't put in enough effort to study different chart, to keep just putting in the hours to understand what really is price movement, what is price response, what is price position, what is momentum, what is price behavior. If you don't put in the effort to understand all these things, it's like a puzzle. You in the end still shatter all over the place. You still find yourself not being able to trade profitably because you don't understand how price works. All right, so that's it for this workshop. I hope all of you really understand. Oh yeah, before we close the workshop, there is one more thing that I'd like to discuss in this video. Almost forgot. It is re-entry. So this is also a basic topic. So if you want to screenshot this, please make sure you take a screenshot right now, and I'm going to remove them. All right. So the second topic of the day is re-entry. So this is also a topic that I have discussed before, which is when should you look for a re-entry and when should you not? And it all goes back to one thing. Does market confirms your trade idea? So let me ask all of you one thing. How many times have you, me, or any of us get caught trying to revenge trade a market? One good example would be this. You believe that price is responding at a resistance level, you go short. Maybe you go short here after seeing the rejection, stop loss above the high, and you were unlucky enough to get stopped out. And right after you get stopped out, what's going to happen? You are going to see another rejection, and you're going to confirm yourself that, hey, this is a double top. Then you go short. Then price goes up again, come back down. Oh, is that a TPF failure? Then you go short again. Then when price stops you out one more time, when it's the exact time where you should be going short, you stop trading. And you just watch this thing drop all the way down. And this is an extremely important topic. So when it comes to re-entering a setup, a trade idea, it is all about whether if market confirms your thesis or not. Getting stopped out on a trade idea, on something that is inside of your game plan, is a good loss. This is a bad loss. This is a terrible loss. Right? So all of you, please don't see every trading loss as a bad loss, because we all have the habit of saying, hey, I took a loss today, it's a bad day. It's all about risk reward. Sometimes you take a loss because it is a risk worth, wow, it's a risk worth taking. But sometimes if you take a loss and it's just out of randomness, it's just out of impulsive behavior, then it's a bad loss. So when price, let's say, what's the biggest problem here? You see, I always tell, I remember there were a few of you asking me about this topic before. I always say, if today you take a loss on this simple equal high rejection setup, right after you take a loss, don't get back into the market until you see price remove the uncertainty, until you see market clears the obstacle, which will be a break under 1922. Don't re-enter the setup until you see price do this. Because if today price stops you out and you just believe there is a double top and you jump back in again and price stops you out, there's just not been once that the market tell you, hey, your thesis is correct. No. The only way the market will tell you, hey Neo, your trade idea is correct, now it's time to go short, is when this obstacle has been removed. Because the main reason why you lose your first trade, you lost your first trade, was because market react strongly to this 1923 hidden support zone, right? Because if I put on the replay, there was no way that you will be able to tell that market will just reverse from here, because on the left there's no clear structure. So this is a good loss. You were innocent. You don't know what happened. But one thing you did correctly was you waited for the rejection and you took the sell. So it was correct. Stop loss above the high. There's nothing wrong. Maybe it could have been a little bit wider, but it's still correct. But if price already tell you that we are having a lot of buys defending this level, and yet you still go back and re-short before you see price remove these obstacle, what's the logic behind your re-entry? Let's say you take a re-entry here. You're basically just saying that I think I'm correct. I think I should be. I must be correct. As opposed to if let's say price really does this, my initial trade idea was correct. I was just a little bit too early to the party. Then it makes a lot more sense. All of you understand this? Alright? As opposed to you keeping shorting, as opposed to you now wait for price to break and say, hey, I think I'm correct. Alright? Another way, another example would be something like this. So let's say you're trying to short these bear flag. Let's assume it's a bear flag. You go short here, you go short, and maybe your stop loss was a little bit too tight, you got stopped out. And yeah, right after you get stopped out, you can't enter here, you can't enter here, price drops all the way down. And after price drops all the way down, there was the only way to make sure you are entering at a better price level is to say, hey, if I'm correct, I want to see price break under this area and come for a retest and I'll short it. That's good. That's a good re-entry. Or if you are a little bit more on the aggressive side, you can also say, if price breaks under this minor structure, is telling me that market is really first thing reacting to the level. My stop loss was just a little bit too tight. Should have improved on that. If it's able to break under this minor obstacle, I will go for a short. Maybe small size, let's say 50% size, 70% size. After the break of 1916, I'll add back into the sell. Alright, so that would be two good way of re-entering this kind of scenario. Alright, so that's it for the workshop, and I hope all of you learned something new, and I'll talk to you later. Bye bye.